Good morning. Hey, Ayakami, how you doing? Yeah, we were having that big discussion on the Discord channel last night. I was supposed to go live, but realized that I wasn't set up at home to go live on my home computer. We'll get that sorted and we hope to get more live sessions going. How did you go for the US CPI news release? And also, by the way, a quick sound and visual check. Hey Stefan, good morning. How are you doing? How's everyone doing? Okay, fantastic. So we are live streaming now on TikTok, YouTube, Facebook, LinkedIn, X, Twitch. If you're on the session, do drop a message, say hi, let me know where you're joining us from. And for all the regulars, a big welcome back. Thank you for joining me again. I hope you all went well for the US CPI last night. I did fantastically super happy with my trades last night, so I hope you guys had the same too. Hey NX, how are you doing? Hey Jimmy. If you can help me out massively, do remember to click that like and subscribe button on whichever platform you are joining me on. And the link for the Discord channel is there if you haven't already joined us on Discord. Good morning, Nev. And if you have any questions at any point in time, please feel free to put it into the chat and let me know. Okay, everything seems to be working well. Let me just double check. Good. Now, let's keep going. Alrighty. Okay, it's all working good. Quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as education material only. Please do your own due diligence as the contents of this webinar are not intended to be a recommendation to trade a financial product, and your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. With that said, looking at the news, what has happened since the last time we spoke on Tuesday, right? We didn't have a live session yesterday, but we did have a couple of news release. Yesterday we did have the RBNZ with their interest rate decision, keeping rates at 5.5%. No big surprises there, no big reaction there on the news release. You can see here, oh wait, no, where was it? At 10, so there, right? It spiked down a little bit before pushing back up. Not a huge move. It went pretty much from 6057 down as low as 6045. Not a big move to the downside. Ended as high as 6077 and then closed the hour at 6071. So not a big reaction there on the RBNZ interest rate decision because they didn't do too much. They kept rates at 5.5%. The rate statement as well did not surprise markets too significantly. But there's always a but. What happened at 8:30 p.m. GMT plus 8? I was supposed to go live to trade together with you guys. Couldn't get it set up on my home computer. But what we saw on the CPI for the US, it was a 3.2, expected a 3.4, came out at a 3.5. I was thinking that it was going to come out between 3.2 and 3.4, anticipating that if it did came out at a high of 3.4, we might see a bit of a push up on the dollar before a big retrace or continuation to the downside. With CPI being released at 3.5%, what we saw is that inflation, this indicated that inflation growth was higher than expected, right? Inflation growth, CPI is an inflation growth number, year on year, higher than expected. It was 3.2, expected 3.4, came out at 3.5. With inflation growth being higher than expected, that led to the idea that the Fed Reserve might not be as ready to cut rates as the markets once expected, right? Now, might not be as ready to cut rates as it once expected, and that's why we see on the CME Fed Watch tool, May 1st, we're pretty much confirmed that they're going to keep rates on hold at 96%. In June, on June 12th, with the meeting, one day ago on the 9th of April, it was a 42% chance that they would keep rates on hold, with a 56 or 57% chance of a rate cut. Following this CPI news release at 3.5%, it's proven that, or it's indicating that maybe the Fed Reserve might not, the US Fed Reserve might not be as ready to cut rates, leading to a big swing, a huge swing in the rate cut decision, going from 42.6% chance of keeping rates on hold to now being 83% chance of keeping rates on hold in June, with a 16.9% chance of a rate cut, right? 16.4 for a small cut, 0.5% chance for a more significant cut. So a 16.9% chance for a rate cut. Overall, oh well, if you round it up here, it says 17%. All right, so overall, it swung. It swung from 42 to 83. Because it swung and the rate cut decision is not as ever present, what we saw was the dollar index went from 104. It was sitting at this 104 support level, and it shot right up. Within the hour, it went from 104.10, closed the hour at 104.77, continued to the upside, ending the night at a high of, where was it? 105.24 or 105.25, almost 105.25, right? And then consolidated along this resistance, now turned support level, and again resistance, now turned support level. We're possibly looking at some further upside to come for the dollar index, depending on what's going to follow after that. So that was what happened with the CPI data release that we saw last night. Ayakame is asking a question: with this CPI result, what expectation of the Fed's based on the CPI? Okay, just answer that question there. Good morning, Jew Marinas. How are you doing? Hey, Christina. Good morning. Hi, Angel Case. Hey, Pips Apprentice. Good to see all of you back on the session. Give me a second. All right. So that was what happened with the CPI. Following on from that, at 9:45 p.m. GMT plus 8 again, we had the CAD, right, the Bank of Canada, with their interest rate decision at keeping on hold at 5%. Following this big result on the dollar index, right, these big results from the CPI on the dollar index, what we saw on the CAD did not factor in too much, right? At 9:45, we saw zoom in a bit, where am I? There, at 10 o'clock, 9:45, we saw a little bit of a fluctuation, but it was still driven all by the dollar index pushing the US CAD to the upside. So again, that decision from the BOC, very similar to the decision from the RBNZ, did not affect its prices too much. It's still all driven right now by the dollar index. Okay, so that was what happened since the last time we spoke. Now, back to the present. Well, before that, 2 a.m. we had the FOMC meeting minutes. Again, not a big influence that we saw from this news. Fed favors reducing monthly asset runoff pace by roughly half. Meeting minutes didn't do too much. Okay, so that's what happened. Didn't bother about this news too much, and that's what's happened since the last time we spoke. What we have to look forward to for today is at 8:15 p.m. the euro, the ECB with their interest rate decision. The main refinancing rate most likely going to keep at 4.5%. It's not so much about a number at this point. It's about the statement that's going to accompany this number, right? It's going to be the statement. We're going to pay attention to whether they're going to say that we haven't increased, we haven't cut rates, and we're not looking to cut rates even into June, or are they, as markets expect, going to signal, right? Do a bit of a forward guidance and signal that they might cut rates, or they're likely to cut rates in June. Are they going to be the second one to cut rates? They're not the first. If you can, if you remember, put it into the chat and let me know. Do you remember who's the first, or which was the first central bank to cut rates? I'll give you a minute to, I'll give a couple of seconds to do that. Put it in and let me know who was the first, or which was the first central bank to cut rates. And while you're doing that, while you put it into the chat, let me know which was the first central bank to cut rates. I will tell you now. I'll put in the link here first. All right, the link is there for you to block out your schedule on the 17th of April, which is next week. Right, next week at 8 p.m. GMT plus 8, 17th of April. You can see there. I will be speaking on a Tickmill webinar. I'll be on a Tickmill webinar, sharing with you how to trade the news, to take advantage of events like the CPI, which wants to pay attention to how to trade, how to prepare before the news, how to trade during the news. We've done that. I've gone through that with you all informally during our live streams. But if you want to learn how to do it properly, well, you've really learned how to do it properly, but if you want to recap, you want more information, the link is there. Do remember to, or make sure you sign up for it. You just fill in your name, first name, last name, email address, put in where you're from, and register for the event. I look forward to seeing all your familiar names during this webinar. Okay, so do make sure you register and join me on the 17th at 8 p.m. GMT plus 8. Now, with that said, take that away. Yes, so Ayakame was with the right answer. SNB, the Swiss National Bank, was the first central bank to cut rates. The race is on for second. I think that it's quite likely the euro might be, the ECB might be the next one, but it's likely only to come in June, right? So we'll get a good idea from this April meeting whether they're going to, during the policy statement or more likely during the press conference, indicate that June is a good timeline to cut rates. With that, tomorrow we have the GDP for the UK and bond action. I'm not too worried about that. And then the consumer sentiment. I'll tell you more about these tomorrow during the session. This will be just before our session. We get a see a bit of a result. I don't think it's going to factor in too much at this point, especially given that it's a month-to-month number. And a small drop, 0.2 to 0.1. So I'm not too concerned about the UK GDP at this point in time. The main feature will now be that one, the main refinancing rate, and also the press conference for tonight. Okay, with that, now looking at the charts, we've just seen the dollar index come right back down. just at the start of this hour, down from 105.30 down towards 105.18. Now, above this level, let's just check what's above 105. We have a dotted line here at 105.95 or 105.106. Zoom it in a little bit. Ooh, what am I doing? Okay. I want to highlight this level here as well. I think that 106 will be a good level, but it looks a little bit too high at this point. We're going to highlight this level here at 105.58. And beyond that, we have 107, which is way up there. Okay. So now again, back to the present. First things first, it's going to get choppy. It's going to get choppy. As you can see, the last time we broke above, or we were trading above 105 on the dollar index, was back in November last year. All right, if I just took this line right across, right, if I took this line right across, you can see that the last time we broke above 105 was in bouncing upwards from 105 was in early November last year. It shot up, retraced about there, and then came up to a high of 106 before coming right back down again. So now coming to this point, here we go. Again, this big move because of the CPI. That head and shoulder broke down a little bit, but it failed to break below this 104 level before bouncing back up. We don't need this because that's done. That resistance area turn support is valid. We can take a lot of these lines away. We definitely don't need this. It's just broken up, so I'm just clearing up the charts a little bit. Okay, we can keep that there for now. All right, there we go. And checking this trend line, it's pretty much invalid. It's not relevant anymore. So we can take that away. Now looking at this, and from this overall move to the upside, putting in our field levels, you can see that this support level, you will consider this whole thing, I'll move this up, and consider this whole thing as my support area. All right, so what I see possible, what I think could happen here is, you see that if we took that point there, zoom in a bit. Hey Jamil, how are you doing? I'm doing super. Hey Diana, good morning. Now you see this, from this high here, it came back down, tested the support, resistance to support level, this whole area, consolidated, pushed up, retraced. It's sitting in this area here. So what we're possibly looking for is it needs to stay above 105. Could very well do this, and then big push up again. The question would likely be, could it retrace further? Could it break down from this support level? I think that with the news that we saw last night, with the sentiment from the Fed Watch 2, it looks unlikely that we're going to see a major retrace right now. I think that I would like to see it push up a little bit before maybe Friday seeing a retrace. Okay, so now it's sitting there. It needs to stay above 105. So today being the 11th of April, dollar index needs to stay above 105 support area before testing higher to 105.58. Okay, if it, so this, I'm looking for that to happen, but if it does break down, if it does break down from this point, I would say that that would be a key level to watch out for. I wouldn't be too worried about it if it comes down to this point. Only if it breaks down from 104.80, then we might see a big significant drop back down. So main thing is that it needs to stay above 105.58 and 105 support. But if it breaks down below 104.80, then we might see that come back into play. Okay, so in this area, it's a bit of a indecision point at this point here. Okay, does that make sense? Let me know, let me know. Okay, so with that, you can see it tracking quite significantly lower right now. I feel that this current move to the down, this small move, well, 105.30 now to 105.17, this relatively small move to the downside is likely to be markets opening, profit taking. So to see a retracement, possibly going to look for it to bounce back up. Not too concerned at this point, but if the sentiment changes, I'll let you know on the Discord channel as well. So make sure you joined if you haven't already. So now looking at the charts. Okay. All right. So now looking at the charts on the Kiwi. Trend line, done. Take that away. Dip level. So we had a double top which did not work out. It broke above higher. I'll also share with you some of the trades that I got into. We don't need that. We don't need that. We have this point here as a relevant level. It broke above 38.2, and we found that it respected about 50 right there. Okay. Now looking at this, putting the levels in again, you can see that it's coming right back up. So we have this point here on the Kiwi. All right, we have 23.6 here as well. So it's likely that we could see this test and then maybe push back down again. Again, there is a pattern here where we're seeing this move to the downside. I'm trying not to mess up my chart too much. This move to the downside and then this happening. I'm pretty sure you all know what pattern this is. Right, so we're looking for this to test and reject back down again. Looking at that, I'm possibly looking at a dollar strength to continue. We're looking at selling down on a rejection of the 23.6 level, rejection of that 0.6 level as well. We're looking at 5980. Stop loss about 20 pips. Take profit, go down to 35. Let me see. That point there, that's my low. So about 40 pips to the downside. And then if it breaks past that point, you have the next level down here. Okay, so there we go. Hi Lydia, how you doing? Didn't get a notification today. I have no idea why YouTube didn't send out a notification. No idea. Hey Linley, how you doing? Okay, so on the Kiwi, we're looking for this to track up, slightly reject and turn down. 5980, 20 pip stop loss, 40 pip take profit to the downside for continuation lower. We're looking at this to sell down, sell 0.5980, stop loss 20, take profit 40 to the downside. Okay. It's sitting right there. Even if it sits right there and it pushes lower, there will still be a trade I'll look out for. Then onto the Aussie, right? I was telling you all on the Discord channel, don't know if you guys saw it, was looking at the Aussie for possible selling opportunities last night. This was a trade that I got into very quickly because I actually put in that order before the news. Right before the news, I was looking at this point here. And I thought, trend line, if it breaks that trend line, if it goes past this point, I'll look to sell. I had my, what am I doing? Okay, I had my order, sell, stop order there, 30 pip stop loss. I actually had it a good 90 pips to the downside. I had a good 90 pips to the downside, which would have worked out very nicely. But what I did was that once it came down to that 50% level, and then I saw that it was outside of the Bollinger Band, I closed out on my trade. So I took about 40, I think I took about 45 on that. 46 or 45 on the Aussie. But it was a very quick trade. A very quick trade, triggered, came down, outside of the Bollinger, closed down the trade to the downside for the Aussie. So that was my first trade from last night, selling the Aussie down. Take that away. Now that that's broken, take that away as well. 50 is done. Take those away. 50 is done. I don't need that. I don't need that as well. Okay. So now I have this point here and I have that level there. Looking at this to the downside at this point. Again, very similar to the Kiwi. I'm thinking whether it could get to that level. Or maybe even a little bit higher. So I would go for the Kiwi on a little bit of an earlier move. I'm just thinking if the dollar does continue push lower before bouncing back up, we could be looking at this move on the Aussie. Right, so we're looking at that possible move. Still looking for the downside. Still looking for the downside, but going to take a little bit longer on the Aussie. Just thinking of these points here, 38.2, and then pushing back down. I would be looking to sell 6545. Stop loss 20 pips. Take profit, you could go 45. I could even go all the way down to that previous swing low at 60 pips to the downside for the Aussie. Okay. 6545. 20 pip stop. 60 pip take. I'm happy with that. Okay, good. So we're going to be a little bit, I find that it's going to be a little bit risky because we're anticipating that dollar strength to continue, right? So we're looking out for that. So we're looking to sell at 0.6545, 20 to 60. 545, stop loss 20, take profit 60. And there we go. All good. Super. Now, with that, we're still looking at that sitting there. I'm just thinking double top, big push down, but I'm anticipating a retrace. That's fine. Then on to the yen. Right, look at that. We talked so much, so that did not happen, that did not trigger. Take that away. We talked so much about the yen at 152. Is the Bank of Japan going to intervene? 152 was a key level that if you look at it on a daily time frame, the last time it rejected was in October and then again in November last year. And last night it just went straight past. It just blew straight past that 152 level, shot straight up. I did not even catch this move. I did not catch this move on the yen. I was very cautious when it was above 152, so I thought maybe they intervene sometime, but it shot straight up from 152 up to 153, as high as 153.23, 153.23, and then now it looks like it's going to continue higher again, right? So if we look at that as the overall move up, we don't need that anymore. We can put this up here, right to that 152 level. That's my resistance turn support. We have a dotted line right here at about that 23.6 level. And we're looking at possibly further upside. Okay, take that away and that away. Okay, so now it's sitting there. What needs to happen here? If that dollar does continue to strengthen, if it does continue to push back up above to 105.58, then if you look at that, it needs to get past. At first I was thinking that it needs to get past 153.15, but at this point now I'm thinking 153.20. I'll round it up to 153.25. It's in the territory that we could see some major reaction from the Bank of Japan. Just be extra careful there. But what I'm looking at here is that if this pushes up, we might see this continue to the upside. All right, going to retrace a bit now. As long as it stays above 152.67 or 162.65 in that level, I would say the continuation to the upside is more likely. All right, if it breaks past this point, we might see it come back down to 152. But overall, I think you can scalp it up, but it's more likely to turn back down again. It needs to stay above this area. It needs to stay above this point to maintain its bullish intention. And look, it's very similar. This big push, retrace, and then this again is very similar to what we've seen. Right? So I think that it needs to complete its retracement. It needs to complete its retracement. We could see further upside. I think that what you are looking for is a push. No. What you're looking for is a bit of a push back down again like that. Okay, but I think for the short term, medium term, we're possibly looking at 153.35. We'll go up to 153.80, 20 pip stop, 45 pip take. Driven by the dollar index, that's quite possible. But you got to be very careful. We haven't heard anything from the Bank of Japan so far. Right, looking at background of yen weakening to 152, 153 to US dollar, not necessarily the levels themselves. All right, so it's not doing too much about that. I feel that looking at this, I don't want to say that it could get to 154. I just feel that that's really overextending. So I think let's get it to 153.80. Okay, so US yen to complete its retracement and push higher above 153.35, 20 pip stop, 45 pip take to the upside. But we're going to be poised and ready for any intervention to come. 153.35, stop loss 20, take profit 45, but we're going to be watch out for possible intervention. Okay, we're in that danger zone right now. It is in that danger zone, so you just have to be, you can buy it up, just know that buying it up is going to be a little bit more risky because you just never know when the Bank of Japan is going to pull the trigger or a trigger. I don't even know what trigger they're going to pull, but if they're going to do anything about it. Okay, let me think. Yeah, I think it's fine. Any questions so far? Any questions, put into the chat and let me know. Now with that, then looking at the pound. So if you remember on the Aussie, I had that trade within the less than an hour. Within the hour, I closed out at 45. Once I closed out of that and I was seeing that big dollar strength in play, I went to the pound on the hour close. You can see that, I'll zoom in a bit. You can see that it closed, it came back onto the Bollinger, and that's where I got into a trade here on my pound dollar to sell down because of that dollar strength to that support level that we have here, right? And then within the 3 hours, it came down, hit my take profit at 70 pips there. I closed out. Okay, so that was a 70 pip move on the downside for the pound dollar. Now, that inverted head and shoulder did not play out. Take that away. We had a double top, but you know, that double top you wouldn't factor in because it's driven by news. That doesn't factor anymore. Take that away. We don't need these anymore. Can take away some of these levels. If I considered this whole thing, we would have 61.8 down here. We can take this and these away. There we go. Clean up the charts as we go. Now on to the pound dollar. You see it testing this support and bouncing off this support a little bit, right? Because of that dollar retracing a little bit. You see pound dollar pushing back up off this support. We don't have any major pound news for today. I feel that you can see this support has held since Feb. It is also that 38.2 level that has held. And I would say this whole thing is a bit of a support area. Take that away for now. I'm considering, all right, naturally the easier move will be to sell it down, right? And I wouldn't do anything here. I'll look for it to break below 1.25. Break below 1.25, 1.2490, stop loss 20 pips. Take profit, you got a good 105 to the downside. Yes, there is that relatively straightforward chance there. I'm just thinking that how it's bounced off this support, could there be a chance that the pound 1.2565, stop loss 30 pips, take profit back up 130 to the upside as a counter trend trade idea, as a what if the dollar pushes all the way down. Look, it's retracing back down, back up now. So I don't think that that's a big move likely to happen. But you know, the idea that this might push up is something to consider as a counter trend idea. But I think the safer thing to look for, the more consistent thing to look for, is a consolidation before a push to the downside. Okay, so pound dollar, we're looking for it to consolidate to break 1.25, then you sell at 1.2480, stop loss 20, take profit 105. We have an interim level there, but I think that's a very weak level at 124.50. 1.2490. Okay, stop loss 20, take profit 100, but we could have a hesitation at 1.2450. 1.2450. There we go. Might have a, and then also I would say that this one has a, remember that there is also a counter trend opportunity. There we go. Yeah, it's bouncing back now, so there is a chance. If not as high as 130, it could get up to this point here, which is about 50 pips, 55 to the upside, just at about that point, which is also about 50% of that overall move down. So that could happen, quite likely. Today we do have PPI, yes, Ayakami, but I think after the CPI, I don't think it's going to do too much, especially with PPI 0.6 to 0.3. Normally PPI does have some impact, but not massive, especially following such a massive move from the CPI last night. Okay. Then, actually, you know what? I kind of really like this idea. This counter trend idea kind of strikes a interesting tone, interesting note there. It might bounce back up. Watch out for that. Then onto the euro. So I did at the same time with the pound and the euro. Again, selling down. Again, same thing. At the same, or slightly a bit later, I did the euro, came down, tested this level, back to the retracement, back to the Bollinger, broke below those levels, but I sold the euro down as well, good 50 pips to the downside. This hit my support level, right? So last night was the Aussie to the downside, pound to the downside, euro to the downside, 3 trades, don't know how many total pips, but very happy with the results so far. How do you guys go on the CPI last night? All right, so now euro is at this support level that we saw on the 2nd of April. And if we drag it right across, you see that this is the level we saw in Feb. And again, swing level here, we got a support level. A bit too many lines. I want to clear out some of these. Let me just check on H4. All right, so we don't need, I'm just going to take out some of these we don't need because they're all gone straight through. Right, that's fine. I keep that. That's my swing low levels. And this whole area. Okay. Now, with that, okay, I'll show you this as well. The last time, again, 7th of March, when the ECB met, where was it? 7th of March was right there. Okay. 7th of March when they met, and during the press conference, so ECB met at 8:15. I think it was 9 before daylight saving, so it was 9. Had a small push to the downside, and then during the press conference, we saw the euro push up to that resistance level. This was last month, right? So now, again, to the current, I'm actually looking at this very similar to the pound. Could it find that support and push back up? I don't think it will go all the way back up to that resistance, but I'm just thinking very similar to the pound. Could it get up to that 50% level? If it does come up, if the euro does come up to that 50% level, that's going to possibly show some downside on the dollar index. What I'm anticipating is this move, right? So it might push up, and then after that, dollar come back into control. So if you wanted to trade this up, let's do a good 50 pips. But we're already looking at a possible counter trend here on the pound dollar. I think the euro would be worth looking for reaction at 1.08. The rejection of 1.08, you would have a no more maximum 20 pip stop loss, a good 60 pip take profit back down again. So I'll look for that rejection. Okay. So ECB might push the euro up, but thinking that as much as the euro can go up, the dollar strength might come back into play and drag it back down again. So euro dollar, I'm looking for a rejection of 1.08. I'll sell down from 1.0790, 20 to 60. 1.0790, stop loss 20, take profit 60 to the downside. Okay, yep, I'm happy with that. Then on to the US Swiss franc. We know dollar index pushed it up, retrace. Now it's almost a similar pattern. If I put this side by side, you'll see the similarities. It's likely to retrace back down to the support. It does have a little bit more volatility. You see this big drop. This is not as big. So I'm thinking that it could, H4 time frame. Look at this. Back to the H1. Look for this move. So I would love to see it retrace, test the support, and then buy it up. But I think that might not retrace as much. We're possibly looking for it to push up, break past the interim level, and then you could see it go higher, which means that we're looking at 0.9170. Stop loss no more than 20 pips again. Take profit a good 55 to the upside. Okay, so 9170, 20 to 55. We're looking to buy at 0.9170, stop loss 20, take profit 55. All good so far. Again, if you can, do remember to help me out by clicking that like and subscribe button. Would help massively. Then onto the US CAD, that did not happen. Take that away. That was on Tuesday that we spoke about this. Pushed up, testing that resistance area. Right, this resistance area, go to H4 time frame, you'd see that the last time was in November, right, where it came down, pushed up, failed to break above that resistance, and we saw massive downside from there. Okay, so I'll zoom out to show you that. We're at that level now. So I'm just thinking we're so bullish on the dollar to the upside. What if it retraces all the way back down? Something to consider is a sell 1.36. I don't like it too far away. Hang on. I was going to say sell below that consolidation, but it's too far away. I like that point. I like this as my support. I'm just going to put it to more relevant levels here. I like this as my support, and it's a 61.8 level. So I'm just thinking, could we look to sell down from 1.3665? Stop loss 30 pips. Take profit 50 to the downside. Okay. In the scenario where we see dollar weakness continue on, no major CAD news that could drive it lower, I think that's fine. This is in the event we see a big spike up on the euro, then a big spike down on the dollar. We could see this push down. So 1.3665, 30 to 50. 1.3665, stop loss 30, take profit 50 to the downside. Then, because I know that Lydia and Diana is here, we'll look at the euro yen. Right, we were expecting a rejection of that level. That did not happen. Take that away. First off, on the euro yen, anticipating maybe some possible push up on the euro, and then with the yen possibly also completing its retracement and pushing higher. Then on the euro yen, looking at this, yep, I'm getting to it. We have that euro dollar pushing up, yen possibly pushing up. Take these away for now. Take that away. Checking this overall move. 38.2, 50 bounced off. Short-term trend to the upside. There we have it. Bounced off 50. Pushing higher. So I'm thinking that if the euro does push up and the yen sits there or pushes up a little bit more, we could be looking at 164.60, stop loss 30 pips. I want it just below that point. Take profit, you could go up to 60. Like that. So I'm looking for it to break past, well, break past that high there, and actually that whole area there. So 164.60, stop loss 30, take profit 60 to the upside. On the pound yen, that's pushing up already quite strongly. Again, very similar to the euro yen. We know because the pound dollar is pushing up. All right, the yen is sitting right there but holding. So on a pound yen, I would say that went up and hit our stop loss. But if we're looking at this 192.45, 192.45, take profit 50 pips, stop loss can be very tight at 25 or 20. 25 would be reasonable. Just to that high, I don't see it coming up to that resistance unless the pound dollar really has a big retracement back up. So I'm looking at pound yen 192.44, 192.45, and then 25 pip stop loss, 50 pip take profit to the upside towards those high, this previous swing high level. And then onto the Swiss yen that broke. I didn't get into this trade, unfortunately. I had too many other trades to look at. This was what we talked about on Tuesday for it to break that trend line. It only broke the trend line on Wednesday with the news. Came right down towards those levels there, would have hit a nice take profit of 44 pips. But right now, that's done. I wouldn't have this trend line. I would find this as a reasonable level. Pushing up, I would have another level here. I wouldn't be too concerned about this point there. And I would not be too tempted, I have a point there. I would not be too tempted on the Swiss yen unless we see the Swiss franc come back down. No, yen push strongly to the upside. It's pushing now, but what I'm looking for would be Swiss yen. If it breaks above 167.80, 167.90, I don't think it's worth it. It's 40 pips. It's 20 pips like that. It could most likely be that move, but I don't think it's going to be worth it. There are too many levels in between that could cause it to stop and reverse. So I wouldn't do anything here on the Swiss yen. All right, fair enough. Then onto gold. This was what we were talking about. At that point on Tuesday, we were like, oh, something's happening on gold, something's happening. And as we were talking about something happening, I think after the session, after the session, I was telling you guys I bought this right up, got out at 123.65 just as a hit. And then it came right back down, bounced off the middle, came back down, tested this channel, the bottom of the channel right now. Right, so we have this points, this points here, the bottom of the channel here, and the bottom of the channel here. And then the top right there, actually I can move this slightly higher and take that up like that. All right, so it's right at this point here. The question is whether this level, right? So if we see that dollar continue to strengthen, that is going to drag gold back down. We were all very concerned about gold going that high. If it breaks the channel, don't do anything yet. If it breaks out of the channel, don't do anything yet, because what we're looking for it to do is to break out of this whole area. Is a bit undecided, right? This whole area is a bit undecided. It's going to do something here. Only if it breaks below 23.27. I would even say 23.25. I like that round number. Gold likes round numbers, right? If it breaks below 23.25, then we might see a further retrace back down possibly to that 23.05 level. Okay, so we're looking for gold to break down below 23.25 to trade down to 23.05. 23.25 to trade down to 23.05. Okay, but it all depends on what's going to happen here. It's sitting there. If dollar does push down, it's showing a little bit of that likelihood to push lower. We might see it bounce off that channel. More likely, I mean, this is the counter trend move, right? But if it bounces off this channel, then it's relatively straightforward. We're looking for, again, further big highs on gold. Firstly, to 23, right? So if it bounces off this, we'll see it get to 23.63 first, and then if it breaks past that, we're possibly going to see significant upside on gold. I can't see, apart from a possible manipulation, I can't see why gold should be climbing up to that 2400 level, but that's always a possibility with this channel maintaining. This channel maintaining, you're going to see that push up to 2400. Okay, so a lot of things to look out for today, a lot of things to be watching out for. Please remember, if you haven't already, do click that like and subscribe button. And if you remember to join me on the 17th, again, the link is there for the session with Tickmill. To register for the session, and I'll see you on Discord. If not, then I'll see you all tomorrow, same time, same place. Take care now. Bye-bye.